Welcome to the IFRS Foundation podcast. My name is Claire Short and I'm part of the communications team. Today I'm joined by Sue Lloyd, Vice Chair of the International Accounting Standards Board. We're doing things a little differently today. We've had to make some adjustments because of the escalating coronavirus situation, and we're recording this episode remotely. This is also the reason we ran a shortened agenda for our March board meeting, which was held remotely on the 17th and 19th of March 2020. 3 important projects were discussed this month. Sue, can you update us on the decision that the board made regarding IFRS 17 and its effective date?
Sure. So the board's now completed its discussions on the amendments to IFRS 17 insurance contracts and the changes that we proposed in our public consultation in June 2019. At this March meeting, we made the final set of decisions that we needed to make, and this was about the effective date of IFRS 17. And the board decided that we should defer the effective date of IFRS 17, not just to the beginning of 2022, which was what was proposed in the exposure draft, but actually until the beginning of 2023. Also, we talked about the exemption that's currently in place in IFRS 4 for some insurers who have a later application date for IFRS 9, the financial instrument standard, and the board decided to also extend that exemption to 2023 so that insurers can still, that are eligible for that exemption, can still implement both IFRS 9 and IFRS 17 on the same timeline. So that, as I said, wraps up our consultation, our redeliberations on this June 2019 consultation document, where we've confirmed much of what was in that document. We've made some minor modifications in response to the feedback that we've got, and we've actually included a few additional amendments, again, as a result of the feedback that we got on the proposals. Now, some people might be surprised, maybe pleasantly surprised, by the fact that the board deferred the application date of IFRS 17, because we've talked a lot about, being very focused on timely implementation of IFRS 17, which we see as a really important improvement to the quality and comparability of accounting for insurance contracts. We continue to feel that way, but we did decide to make the deferral really, I think, for a couple of main reasons. One was to make it more likely that insurers around the world will be able to implement the new requirements on the same timeline to assist with comparability for investors. And also because we thought with a bit more time, maybe the implementation could be more robust, so we get a better quality application of IFRS 17. So hopefully we're still on track to issue these amendments to IFRS 17 in the second quarter of 2020.
Thank you, Sue. Let's move on to management commentary. Can you update us on the latest discussions around this?
Sure. So since we added the project to our agenda to revise our management commentary practice statement back in 2017, we've been talking about staff proposals where we're really aiming to consolidate for changes in narrative reporting since we issued the original practice statement, and to address any sort of gaps in reporting practice. So far we've looked at topics like the objective of the management commentary and the qualitative characteristics that management commentary should have, and we've talked about particular aspects of the guidance. We discussed the objective of management commentary, and we tentatively agreed that the objective is to support primary users when they're assessing a company's prospects for future cash flows. We talked a bit about how that links into value creation, and also to help users assess management stewardship. We also started looking at the disclosure objectives that we might use for the particular content elements of the management commentary. We weren't asked to make any decisions on this at the meeting, but we talked about some of the ideas that the staff had put forward. So we've got discussions ongoing on this project, and at some future meetings we'll look more closely at aspects of the business model, resources and relationship, and also strategies and opportunities.
And the last topic discussed this month was rate-regulated activities, with the board having made some key decisions to move the project forward. Can you fill us in on that?
Sure, maybe it's interesting to chat for a moment on why this was one of the projects that was chosen to be discussed, because as you said right at the start, we're working remotely at the moment, and so it was our first ever fully remote board meeting, and we were all sort of testing a little bit how well it worked. And to facilitate that, we really streamlined the agenda down to the sort of time critical things. And this is a time critical thing because we're in the drafting phase. So we've previously given permission to the staff to start proceeding to actually document what we've decided in an exposure draft, which we plan to put out later in the year. And while they've been drafting it, basically a few additional questions came up that they realised that they needed answers to pull the final document together. So that was what we were talking about last week. So what we decided was that the target profit in a regulatory agreement, which allows a company to charge its customer for a specified period, forms a part of total compensation. And we decided that the principle that we have should be applied to regulatory returns on the regulatory capital base as well. So for people following that project, I recommend that you look at the papers where the staff walk through the sort of logic for when the effects of the rate regulation will touch the financial statements for those aspects of target profit, regulatory returns, and also we talked about incentive payments that were linked to construction.
Thank you, Sue. And on that note, anyone interested in that project or any of the other projects that we discussed can visit our website, ifrs.org, and find the full update there. But before we wrap up, can you tell us a little bit more about the discussion paper that we published last week on the 19th?
Sure. So despite the fact that we're all working remotely, we managed to get out the discussion paper last week that focuses on the information provided about business combinations. So many people will have known about this project historically as being called goodwill and impairment, but we have focused very much in this document on things beyond pure goodwill and impairment. And what we're looking at here is a set of proposals to provide better information to investors about why companies have made acquisitions, what their objectives were when they made the acquisition, and how the acquisition has performed relative to the sort of expectations that management had when it went into the acquisition. In addition, the document covers the accounting for goodwill. It sets out the thinking that the board had about whether we should reintroduce amortization of goodwill. As people who have followed the project will know, it was a very close board vote, but the board decided at this stage that we would not move back to amortization of goodwill, that we'd stay with impairment. But the reasons sort of for and against the amortization versus impairment debate are set out in full in the discussion paper. We are keen to hear any new arguments or any new evidence that people think we should be aware of. But also we've proposed some simplifications and improvement from a goodwill testing perspective, most notably to propose that the requirement to test goodwill impairment annually be changed to an evidence-based impairment test, and some other changes to try and provide some relief to preparers from a cost perspective. So a comprehensive document that's really looking at the information set around acquisitions, which is really focused on improving the ability for investors to assess just how good is management at making acquisitions from a stewardship perspective. So that's gone out with a 6-month comment period, and we really encourage people to look at that document and to let us know what you think.
Thanks, Sue. And that's it for this episode. Please keep visiting our website, ifrs.org, to stay up to date with our projects and other news, especially amidst the current uncertainty created by the coronavirus pandemic. If you have any comments on this podcast, please email communications@ifrs.org. We wish all our listeners well as leaders around the world try to come to grips with COVID-19, and please tune in next time.